IT stocks were the ones that were rallying yesterday, so let's put the spotlight over there. There are a lot of brokerages that continue to remain selective on the IT space and positive on the sector. So we'll, focus on them as well. Nomura, in fact, recently just turned bullish on the IT sector as well. Sandip Agarwal, fund manager at Sowilo Invst Managers, joins in now. He's tracked the, the IT space for over decades now. Sandip, thanks a lot for joining in. Nomura put out this note where they said that Q1 will mark the bottom of the sluggish revenue growth for the Indian IT sector. Would you concur with that view? And are you as bullish on the IT sector? I mean, is the risk reward now starting to turn favorable?
Hi, good morning, and thanks for having me on the show. So I, completely agree with what has been mentioned in the Nomura note. But I would say I think not this quarter, but last quarter was the worst quarter in my view. This quarter will begin with positive surprises, at least on the margins front. And this I'm telling you based on data of global players and Indian players. And there's so much data all over available, which clearly suggests that this quarter cannot be bad, at least from the margin front. Revenue growth also, I think that, it will be slightly better than the previous quarter. So that is the way I look at the sector. And I think from the stock price perspective, the last quarter honestly is the bottom of it.
Okay. Sorry. So just to complete that argument, if you think that this is the bottom, right, and there are, of course, things are going to improve from here on, what are the biggest triggers for the IT sector now? Where do you see the turnaround come in? Is it in better client spending? Do you think BFSI is going to pick up in a big way? Do you think the overall environment in the US is picking up? Just trying to understand what are the big positive triggers for the IT sector now.
So, if you see the data of Microsoft Azure, if you see data of AWS, if you see data of SAP, if you see data of Oracle, everyone has been posting a very, very robust growth of from 6% to almost 30% year over year in this sales. And if you see this sales basically percolates down for implementation and maintenance and development, all three things to a lower cost players or basically offshore play. And I think, when this growth is coming and we are seeing this for last 4 quarters now, it has to definitely percolate down to Indian vendors finally. So I think that is one reason why we feel so bullish about it. Secondly, if you see the BFSI also has made a kind of bottom, we are not seeing any negative news on the BFSI side. Third, if you see the deal win data of last 4 quarters, whether it is TCS, whether Infosys, you will see a clear trend that deal wins have been very strong. What has not happened has been the execution. So I think now execution will start and we will see much better growth. But having said so, I would also give a caveat that this is not a sector where, you can do 30-40% kind of growth. So that expectation should not be there. This is a sector where you can do 10-12% growth in a steady state. And I think that is where we will return back from this quarter.
All right. Hi, Sandip. Good morning and good to see you. And you're clearly sounding quite bullish and optimistic about prospects of the IT space. My question to you is how much is in the price? The last 1 month or so, the index itself, I think, is up close to 14-15%. And at Jefferies' note today, they say that the sector is trading at around 28 times PE, which is a 20% premium to its 5-year average. And it's a 35% premium in comparison to the Nifty valuations. So how much of the good news is in the price? And do you think that now the sector could trade at a higher multiple?
So, Nigel, it is a very good question. Let me put it this way, that as I said that last quarter, I think the stock prices had bottomed out. And from there, you had seen good movement in the stock. So some portion of, the valuation game or the chase for valuation gap has already been over. But let me put it this way that, when this kind of growth which we are seeing in the cloud players is coming, we will also see good demand in the Indian players. Secondly, I think the biggest gap is that, the multiples which we are talking about is based on the current margins. But you remember that, last quarter 1 FY23 was the quarter when margins started falling because of very high attrition. And that has come down very, very sharply. We are down from 27-28% attrition for TCS to now 13%. The subcontracting cost for TCS has come down from 10% to now 5%. So, these are the triggers which will help margins in a big way. And if margins go up, remember that even for the large player, 1% margin improvement means 6-7% EPS growth. And for the smaller and mid-size, it can be between 12% to 20%. So I think the price earning multiple which we are calculating could be wrong because the margins have not been taken account from perspective of how the cost will come down because of lower subcontracting cost and lower attrition. So I think the real multiple may be actually 10-15% lower than maybe at a discount of 10 to 15% to both Nifty and the long-term average rather than being at a premium. So it is all about the earnings.
Interesting. All right. So maybe there's an upside risk to the margins itself, which could surprise. And then, in fact, it may not appear that they're trading at that much of a premium in comparison to the averages or even to the Nifty. Got that point. There are a couple of companies where there's a new CEO at the helm. Tech Mahindra. We had a chat with Mohit, a couple of weeks or so ago. So what's the view on a couple of these names, like Wipro as well as Tech Mahindra? The street is quite optimistic that things will turn around for both these two companies. Your view?
So, Nigel, this is a very good script which has been there for last 10, 15 years in the IT sector. Whenever, this is a B2B business, right? So only 30, 40 clients make all the difference. So whenever a leader from a large company comes to a smaller company or mid-sized company, he knows some of the relationship which may not be very happy in the large place from where he has come, and he can bring them and he can, give them a more customized service, and he can get those clients. And that is what makes all the difference. You see the story of Persistent, you see the story of Cyient, you see the story of Mindtree, LTI, LTTS. Any company, you see the mid-caps which were very small, they have suddenly post-COVID become so large. Their market caps have gone up by 5 to 10x. And every story you see, the story had started from a change in leader. So I am very optimistic, honestly, with Tech Mahindra. A new leader has come and he has come from a larger organization. He knows the relationship, he knows the work and everything. I am quite optimistic. It may take time of 2-3 quarters more for real turnaround to reflect in number, but then you have to take risk in the market to make money. So you have to invest beforehand. You have to trust the risk which the board and the promoters have taken.
Absolutely. Sandip, I just want to come back to that point you made where you said the worst could be over for the sector and certain trends are picking up. But, Jefferies put out a very interesting note where they said that it's not all hunky-dory. I mean, demand has not really picked up in a big way and IT budgets are still constrained. What is the latest that you're hearing on IT budgets now?
No, this is clearly true if you see data. But what I would like to highlight is Indian IT story is not about only global growth and global spend on IT sector. We keep gaining market share. This has been the trend from 1990. If you see data, every year we gain 1.5% market share from global sourcing. So you have to add that, number one. Number two, we are the lowest cost execution center. So obviously we get a benefit of that also. So it is very hard. While you don't have much to compare, we have to go by that data. But I would be more keen to see data on my top clients, which the growth which they are getting. And that's the reason I mentioned, you see the data of Azure, you see the data of AWS. And in the past, whenever these companies have grown faster, the growth has percolated down to Indian vendors after 3 to 4 quarters. And that's the reason I'm saying I'm not expecting a 20-30% kind of growth for these companies, but I am very confident that we are back to the 10-12% range for the large names again. That is the way I look at it, with a margin improvement. So we are talking about 16-17% kind of EPS growth, and the quality of this company, the management, the consistency, the benefit of currency, all those things, the dividend distribution, buyback, all those things implies that, they can trade to 2 price earning growth ratio also. So I think from that perspective, there is still 15 to 20% upside even in the large name, which is there.
Okay, we will we'll let you go on that note. Thank you, very informative over there to talk about the IT sector and how to approach it. It is one of the big buzzing sectors over the last couple of days. So let's see how things move from here. But let's take a quick break. On the other side of the break, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Stay tuned.